This beautiful table behind me shows the average auto loan rate for new and used car loans based on credit scores according to Experian data from the second quarter of 2020. A few extra percentage points may not seem like a big deal, but when that percentage is applied to thousands of dollars that car loans typically amount to, it adds up quickly. So here's how this plays out in reality. Let's say we have two borrowers. One is a prime borrower, the other one is a subprime borrower. And they want to finance $10,000 for a used car, and they want to do it over 60 months or 5 years. So the prime borrower is offered 17.78%. That's based on their credit score between 500 and 600. The prime borrower gets a 6.05% offer, and that's based on their 661 to 780. The difference, 61 points. Now, over the term of the loan, the subprime borrower will pay $15,164, $5,000 of which will be in interest only, whereas the prime borrower will pay just over $1,600 in interest only. The difference between the two, $3,500 in interest charges. So you can see your credit score is a huge factor, probably the most important factor when taking out a car loan. Now, while this algorithm used to calculate credit scores is a closely guarded secret, we do know that the following 5 factors make up more than 90% of your overall credit score. Your payment history is the most important factor in determining your credit score. It makes up 35% of the score and includes all the payments you've made on any type of loan, such as credit cards, mortgages, and auto loans. Any payments that were 30 days past due will affect your score, sometimes up to 7 years. The more recent the delinquency, the more it'll affect your score. The amount of the late payment also is a factor. If it was only $20, that will count less than if it were a late payment of, let's say, $500. Presence of a bankruptcy or judgment against you will severely affect your score as well. The amount of credit you have available and the amount you use on a monthly basis can also have a big influence in determining your credit score, about 30%. Lenders like to see a wide variety of credit available with usage that is not excessive. The number of accounts you have with balances on them is another factor that can play a big part. Next, the longer you've had credit available, the better. This accounts for about 15%. From the lender's perspective, someone who has never had to pay back a loan does not have a predictable credit risk. People who have not missed any payments over a long period of time benefit with a much better credit score. Number 4, the number of new credit accounts opened recently has an influence on your credit score, about 10%. If you start using a couple of new credit cards, lenders assume you're in need of money, and that increases your credit risk. And 5th, having a blend of different types of credits, like a credit card, auto loan, and mortgages, will result in a higher credit score. This accounts for about 10%. So those are your 5 factors. Before we go, do you have any car buying tips that you want to share with my audience? Maybe a cautionary tale to save them time or money? Let me know in the comments section below. And if you have a video topic idea, jot that down as well. Until next time, I'm Dave Erickson. Thanks for watching. Click subscribe. We'll see you soon. Adios.
Thanks for watching. Please click subscribe and give us a thumbs up. See you next time.
Hey, I want to let you know about a new feature on EverymanDriver.com. It's a car payment calculator you can use anytime when you're trying to figure out what your potential loan amount is and the monthly payment figure. So what you do is you type in the vehicle price, your down payment, trade-in figure, sales tax, interest rate, and the term of the loan. Click calculate, and then you'll figure out the loan amount and the monthly payment. It's a free tool now available on EverymanDriver.com.